Okay, let's move on and let's stick with Motown. Let's also speak with the Group CFO at Escorts, Bharat Madan, joining in the show right now and talk about what he's been witnessing on ground. Bharat, hi, good morning. Great to have you on the show. Bharat, what is it that you're sensing about the rural sentiment currently? It's heartening to see the numbers that you actually posted this time around for the month of June after the second wave did impact the rural end of the country as well. And more importantly, Bharat, how sustainable is this growth? Do you think it can be scalable up until the festive season too?
Yeah, I think as you mentioned, so the rural sentiments continue to be good. I think we've seen it in the last few quarters now. So I think the fourth quarter continuously, we're seeing a good growth now coming up on the rural space. And this quarter also, I think 38-39% growth on the domestic side has been pretty good. Though obviously coming on a low base because the lockdown situation last year. But definitely on the ground, the sentiments are positive from the rural side. So we don't see any concern there. And so going forward too, I think the festive season is likely to be a good season this time.
Right. Bharat, you've increased prices 3 times in the last 9 months. Do you think, A, that commodity prices being elevated is here to stay and that's a reality that the entire industry is going to have to grapple with? And then B, do you see a continual price hike regime for you at Escorts?
Well, unfortunately, this is, I think, unprecedented increases which you're seeing happening. And in the tractor industry, you've not seen really these sort of cost increases happening in such a short span of time. So definitely it's going to be a challenge. So there's also a fear that it will start impacting the demand if the prices continue to go up. The good thing is compared to auto industry, I think tractor industry is still in a slightly better position. I think the emission norm changes have not been there. So there's one key change which is supposed to happen from 1st October has been temporarily deferred by about 6 months now, which is for the higher HP tractors. So that also could have further led to the cost pressures, on the customers. So that's one positive. So, but yes, to your remark, whether we'll be able to continue to do that, I think a lot will depend on how the demand really starts impacting, with these sort of cost increases. But definitely looks like some challenges on the ground with these cost pressures coming in. And it's not stopping as of now, so that's an unfortunate part. So we're expecting maybe some more increases may happen. But obviously the decision to price changes will happen based on how the market reacts and how the demand situation pans out in the future.
Bharat, so can I say that in the second half a double-digit growth is natural now for the tractor industry?
Well, difficult to say because the base is very high. So if you look at the last 3 quarters of last fiscal, the growth rates were almost running into the 30-40% sort of range. So the base as it is very high for the last year. So the initial indication what industry getting is about a mid-single-digit sort of growth. So which means the balance of the year may not see that sort of growth. But all will depend on how the monsoon really grows and how the festive season goes. As of now, things look positive, but going to a high single digit looks very difficult as of now.
How is the second wave impact different from the first wave? I'm asking a very basic question because when we interacted with you after the first wave, same time last year, let's say in July and October, your words were that there is a big uptick in demand, there is more demand and less availability. Do you see that repeat happening, maybe not this month, but maybe in August?
So, Nikhil, last time the issue was the lockdown was very sudden. So the supply chain got disrupted and it's a national lockdown. So unlike that, this time the lockdown was more staggered and state specific and the industry was not impacted to that extent. So that's why the supply chain was not a bigger issue this time. So there were some issues in between, but not the bigger issue which we saw the last time. So the demand obviously continues to be good. So but supply constant which was faced last time and then suddenly we saw a pent-up demand. So that may not be the case in this scenario. But since June numbers look good, because June is also happens to be a sowing season. So June and maybe few days of July, so the season will continue. So we're likely expecting very good demand in this period. So issue could have been if the lockdown had continued in the June month too. So fortunately for us, the unlocking started happening in the towards end of May and across various states. So most of the dealerships also started functioning in June. So that was a positive scenario. And obviously, unlike last time where most of the dealerships are not really impacted and the tractors were exempted and falling under essential category. So this time almost two-thirds of the dealerships in the month of April and May were also under lockdown. So because of state lockdown issues and the rural lockdown issues, and this is much wider spread in tier 2, tier 3 city this time. So that had major impact on the tractor sales in the month of April and May. So maybe some impact has been there on the pent-up demand, which is coming from April and May months to June, and also because of the price increases which have been announced. So maybe some push could have been there, and shopping may happen with the dealers because of that too.
What is your current capacity if your plants operate at 100%? I mean, assuming that there are no supply disruptions.
So right now we can do about 120,000 tractors a month, and we expect another 3-4 months time we should be able to reach a capacity, internal capacity of about 150,000-160,000 tractors a year, which will be roughly 12,500 tractors a month.
Be the average utilization rates for this? I mean, are you running surplus capacity, or you think we could see a repeat of 2020 somewhere?
No, so this time, obviously, like you said, supply side issues have not been really there. So the production continues to run on the full capacity. And then going forward in the month of July, August, which is likely our off-season months, the rains would have started. But still, the production will continue to build up for inventory for the festive season, which is likely to be better. So the month of September, October will be again big months. So obviously, with capacities can't support that sort of volume which we're expecting in September and October, so already start building up inventory now. To prepare for a season. So that's why production-wise, we think the peak capacity utilization will continue.
Mr. Madan, in light of what you're anticipating in the month of September, etc., what is going to be the normal for your agri margins? As of now, you've indicated about 17 to 18% with price hikes, with strong demand trickling in, as well as dealing with the commodity inflation for FY22. What's the sense that you're getting when it comes to your... Okay, we seem to have snapped that line, unfortunately. We'll just be reconnecting with Mr. Madan to get in a sense as to what the outlook is for Escorts. But just to run you through what he was talking about how the overall rural sentiment as of now has been strong, and supply chain had not been a bigger issue this time around, and the decision on price hikes, that is going to be taken as per the market. Just a